This is Justin AMZN for Friday, May 3rd, 2019. It is the 5th, and I didn't get to this till back on the 3rd. So anyway, this chart looks pretty simple. Let's dig in. Here's our move higher. Here's our S curve, and here's our move up. Zoomed out in this view. That's really all that's happening here. Is you have a really nice S curve. Pre-market, there were some opportunities to get in an S curve, and then after the open, had a nice dip here and a run up, and then just sideways the rest of the day. Like really, really difficult to get anything. It just moved a couple bucks. And the big move was right in here, even formed another triangle, started to roll over, but there was just too much bullishness happening. So the gap was a bullish gap and go, clearing these 3 days. The open we had was 1949. Let's see, the open we had on this day exactly 1949, and the close we had on this day I think was, the close was 1950, 63. Okay, I was thinking we were gapping above closes, but we're gapping at the open of this candle. So we were trapping 4 days worth of bears essentially with the gap up here. And the gap right here, if you can follow the cursor way over to the left, so the open price of 1949 is really close to our open price on this one, 1953.45. This was a bullish gap and go. So it only gapped above one candle. This time we gapped above 4 bearish candles. I mean, one bearish candle, I should say. We gapped above all of the previous candles here. And let's see. No, not another one that's really close to that. So really similar how we had just a pullback right here. It pulled almost into the 21, pulled into our, just about into our 1880 and 5 cents price, and then we're way back up here. So this looks incredibly bullish that we should continue higher. It let's see, if so tomorrow's the 6th, Monday's the 6th. I don't know that we're going to get to this X marks the spot tomorrow. That'd be phenomenal if we did and made new all-time high, but I don't know if that's going to happen. If we can chop around in here some more, go sideways a little more, kind of like we did this kind of thing before, chop around in this range, chop around in this range. I don't think we're going to have a huge day like this tomorrow, but I mean, we totally could. We could have a really strong bullish candle, another one to move us up. I think in general we're moving back up to all-time highs, but I just don't know if it's going to do it tomorrow or by the 7th. I guess kind of 6th, 7th is right in this X marks the spot. It wasn't one here. We got there early on this one. That one would have been nice to know that it was going to move up that quickly. And then this one we had talked about as being somewhat easy to identify once you had this range figured out from here to here and then from here to here. But there were a lot of places that could have been targets. Even on its way up, it's like, okay, maybe it'll meander over here, but well, I guess that's the first one it got to. So could it do it again? Sure. Will it? I don't know if it's going to get there. We haven't had a candle that strong bullish since probably this one here. And this was trapping a lot of bears on that day. We are trapping a lot of bears already, but I just don't know if we're going to get a continuation like this one. We totally could. Shortly after earnings, gap up that trapped a lot of bears after a bullish day. Sure, that could happen. What's the range of this one? If we have a range of 95 bucks, yeah, we'd get to new all-time highs. So I guess that's what we're hoping for. And I do, say that word, speaking it in italics is what I'm saying. It's, we're hoping for that. If you're in bullish, great. Continue to move your stop up and trail it. And diving into what's happening in the 5 minutes. So let's jump in nice and close. This is a low of 1936, and this is a low of 1936. This is a low of 1938.24. This is a low of 1938.42. The lows must have had a little dyslexia here and here because they should have been the same. I mean, you had a tweezer bottom here, a near tweezer bottom here, turns into a double bottom. You got a neckline right here. We retest into the neckline with that candle, and we're off to the races. At any point in here, if you were buying, the double bottom here, buying a double bottom here, could have said yes for some trouble. We jumped right into the options, and you bought the very low at like $4. You could have been stopped out for a $100 risk at $2.94. Yeah, that would have happened. Probably would have happened. Even though we made a low here by like $2, the low in the option was actually lower on this candle than it was on this candle. So when this gapped up, there was just so much premium added into it, and it melted away really quickly on this pullback, more so than this pullback, which is kind of crazy, but that's just how options work somehow, without getting into any of the Greeks about it. But yeah, it's just this kind of move was more than $100 on the option, essentially, is what it comes down to. It was like a $200 move in the option to do all that. So as it's starting to break out, you're making this candle, and you could be getting in, at 5 on its way up, or at 4 on its way retesting. You had a nice small candle here. Could have been getting into this candle by 6 by 5. That would have been getting in on this candle, which didn't quite retest as much, but you're starting to see a little bit smaller range. But let's say we got in at 6 by 5. 6 by 5 here. You're in. It retests a little bit, and you're off to rate. I mean, you could have been exiting at $8, and you're good and done. 2R. You could have held on through this, which would have been a little bit nerve-wracking. And it's like, all right, I'm going to move my stop up, and I'm going to lose, half an hour if it comes down. And it didn't come down. And then it's like, okay, after this candle, and then you hold your stop here because that's a really big candle. You want to give it a little bit of room, and then on this one, after this one, makes this candle. It's like, oh, I could try my stop out. I'm going to put my stop right here at 750, and that's 1.5 hour locked, but it's up here at 11 already. So you get it at 6 and it's up at 11. That's 5 hour already. And then it does this candle, another inside one like this. Hammer, by the way, similar to hammer, a little longer, lower wick than the upper wick. Indecision candle, not really a hammer. The body is a little bit too low for it to be a hammer. But then we make this candle. It's like, okay, yeah, that just went from 6 to 16. Get out. Like, that's 10R. It's, that's a good move. And how much further could we go? Well, our next line up here, what was it? Oh, it doesn't show up here. Go back to, there we go. This line is at 1972.50. We have some resistance here at 1970 because that's where we went on options. But we totally did this triangle thing where we broke down. Totally looks like what we did. Which day was that? Right here. It's all fractal. We shot up. Here's our shoot up to 1970. I'm talking bigger picture in 5 minutes. I know this is 1927. Here's our shoot after earnings. We shot up there to 1970. We came down, breaking down from that triangle down to 1881, and now we're moving on up. And we'll see if we get a little bit of a S curve after it. So what I'm seeing is this to this. Let's do like this. This to this, that section, all right, that hour of that day essentially looks like from here to around here, like this, spread out over 4.5 days. That's how fractal this stuff works. So that, if you zoom in, looks like that. And I don't know what percentage, I'm just saying that the things that are happening on a smaller time frame, you can see similarities to it on larger time frames. I know I'm looking at 5-minute charts, so if you squint, you can see it. If you try and look at it, and maybe an hourly would be better. Maybe you'd have a similar number of candles if you went with like a 4 hour, something like that. So let's see how this went. One more forward, I think. Yeah, there we go. Okay. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So that's 10. So then if we went and looked at this as an hourly instead, then we're looking at count. No, it's not hour. I meant 4 hour. Do I have 4? I do have 4. There we go. All right, zoom back in. We're going with that. No, that's more than 10. Oh, I'm thinking because of with the market open. Okay, I really need like a 6 something. Well, anyway, you get the picture a little better here, right? Like from here to here is the same as that. It was on a smaller time frame with 10 5-minute candles on this day, right? That day? No, it was this day. All right. Anyway, it's all fracked. Come back here to 5-minute. Come back to this, and really nice run up, and then you get out, and then this was your second chance to get out. On this candle, the high was at 950, and the high here at 950 was just under 15. So even if you were like, oh, okay, now it's starting to double top, I'm going to get out near that next top or somewhere here. It's like maybe you got out at 13. You just did it poorly and you got out at 13 on this candle. That's a move from 6 to 13. That's 7R. Good. Excellent. Be done. Or maybe you were waiting for it to break out higher out of this triangle, which is a great triangle on the option and on the stock, and has a really small candle. So you could have been bracketing this like 1375 by 1275 bullish, and or adding to your position then, or getting your stop right here, expecting this to move up, and you get your stop rate to get stopped out. So maybe you got stopped out with some slippage like 12. Even if you got out at 12 here, I mean, your stop should have been here at 12 if you were still in it at this point. That's a double on the option. That's a 6R trade on the option. We pull back, retest some of these levels, don't quite get back down to the neckline. Sorry, the neckline on the option, nowhere near it on the stock. We retested to the hammer here, and that's the decision candle. So that was cool. And then we put another smaller hammer in here. And I think I saw it somewhere up here. It's like, I missed that. I missed a lot of this. So anyway, that would have been a great place to just get into something, something bullish. That was this. Wait, what time was that? That hammer was at 11. Oh, 11. That would have been amazing. Getting an 8 by 7. Yeah. And just ride that up to the previous resistance here, where it runs into that candle's high at 1010. So that would have been your target, the 1010 candle. Did you get there? 1010 candle was like 13. I didn't quite make it to 13. Well, I guess you take a little bit off because time has gone by. So maybe you got an 8 by 7, you're getting out at 11. That's where we are. That'd be great. And then this thing, what is that one? It was this, and then it just grinded higher. And I've seen this on Fridays where it has some big move that it just grinds, and it just grinds. And I kind of expected that to happen today, but it just totally went sideways. We had some squeeze form through this. So we had a squeeze form here that didn't do anything. We had this squeeze that went from kind of bearish momentum shifting to bullish momentum as this pullback happened. That would have been a great one, especially because these candles retested into that range, and these candles retested into that range. It just says, okay, I'm going to continue. I'm retesting my indecision points previously, my bounce point previously, and then it just chopped. This was interesting here. We had 15 minutes, 5-minute candles of some choppiness here that then broke down, retested from below, and I thought this was, okay, the last hour we're just going to drop. And it dropped for 5 minutes, that's it, and then recovered and just was flat on the day. It's like, okay, we're not getting that sell-off where, people are thinking, okay, this is good, we should be up here, and we got to close at 1962.46, and our high was 1964.40. So we're within about $2 of that high, I mean, that bodes well for continuation, that maybe we'll get a very small gap down or a gap up or flat and just continue unless something else happens and we gap down. Um, which, if we gap down and we're below, we'd be trapping a lot of bulls if we gap down, first of all. And then if we get below the 5, maybe get below 1925, I mean, we could see some more selling back down to the 21 easily. So I guess we'll see what direction things open up and what prices we'll interact with. I didn't even look at the puts. The puts just lost the value all day long. There was a little hiccup where it moved a little bit, but I don't know what you would have gotten out of that. Would have been really hard to trade. Really hard. I mean, even if you get right at the money, looking for that late in the day rollover, there's a blip, moved up a little bit. It's like, okay, low here. Could have gotten in like, no, not even $1. Okay, this, you could have gotten in $1 here, but that would have been definitely speculating with an hour left in the day. And so it's like, okay, it could just go to zero instantly, or you get a little, like I said, a hiccup, and you got to get out right away. You can't, wait for something to play out. It's just going to lose value, and that's what it did. And, it went from a high of 315 with 45 minutes left to go, went from 315, like $315 to zero in 45 minutes. I mean, that's how quickly it can just all disappear. So it's like, okay, if it's moving up, that's what I'm saying. If you got in at $1 here or here, you're probably flipping that out at 2 within that 5 minutes. It's hard to hold through these pullbacks and to let something play out because you want to, with same day expiration, it's so hard to do. You could have gone out, let's go back and look at our 1950 expiring next week. Let's see what that did on that little move, and that was nothing. It was literally a hiccup along here. I mean, you got a little bit of range. This. Okay, so from like low here at 15.15 to this candle at 16.15 high, and then this candle at 16.65. So, I mean, you're risking the same $100. You got more skin in the game with a larger option price, and you still only get about $1 move. So, that's like, okay, well, I need to be further out of the money, so I don't have to risk as much. And so you're at the next, big run over the next quarter at 1925, and that doesn't even really register anything happening, So it's like, okay, I don't have another option. I'm back at 1960, or you can get at 1965, and you're in the money, so you have something going for you there, and you're buying at 4, and you flip out at 6, and that's 2R. Or you're buying, you do that once, you do it twice, and that's, 4 to 6, 4 to 6, that's 2R twice, that's 4R in the matter of, 5 minute, 10 minute here, 5-10 minute here, something like that. But again, it's got a little more skin in the game if you're getting in at 4 and getting out at 6. But I mean, you can do it. It can do it within a 5-minute candle. That's what's amazing too. That's the optimism that people look for in options, is that it can move in your favor so quickly you don't even expect it. You don't even have an order ready potentially, and you miss out. Or it can move against you so quickly that you got to know what you're looking for exactly what you're looking for. A setup like this, where it's looking like it's going to continue, but it's been just sideways, maybe we're due for a pullback, and you got to be getting in, looking for a pullback on this candle, going counter trend for 5 minutes, 10 minutes. That's literally what you're looking for. Counter trend pullback for 5 minutes, 10 minutes. Get in when it should be happening, get out when, you can't just wait for it to play out. And then get in again, get out again, where, you're just trusting the setup, trusting what's happening. And I mean, this kind of thing happens all the time. This right here, I mean, it happened over here. We had this breakdown from a triangle. we should have continued bullish, and we rolled back down. So there was opportunity there. The same thing where you had a bearish candle, a little bit of retest, bearish candle. The colors are different. Oops, sorry. Okay, these 4 candles here and these 4 candles here. Basically the same pattern where you have a bearish candle, 2 retesting candles, and a bearish candle. You know, and you could have traded this. You could have been getting ready. It's like, well, if it doesn't go bullish, I can get in right here and go bearish. I'm already in this position bullish. I get stopped out and get in bearish, you know, and make a little bit more on the way back down, you know, or I'll get stopped out of the bearish position quickly because I'm already in it from down here. I'm just adding to my profit. You know, that's what you can do. You can play both sides like that, and it'll work out. It could work out. So let's see. This is where you could add your stop at 1250, and you get stopped out at 1250, and then this is okay. Sorry, what time is that? This is well defined. These two. Oops. These 2 candles. I can't click on them like these candles here. That's clear. But the other ones, where is it happening? Bearish at 10:05. Oops. Bearish at 10:05. 10:05. 5 contracts were transacted. I don't know if they were bought or sold. It has one price, 8.15. So what's nice though is the price is 8.15 here. The low is 7.30 here. Had you got an 8.15, your stop could be at 7.15, and that's your risk. And it moves very quickly past 12.15. So, you know, you were in at 8.15 to 12.15. That's 4R on that kind of pullback, and you got stopped out at 12.50 here. So yeah, you didn't have to hold through that kind of move where you would have lost 12.50 down to 7.50, 6.50. You didn't have to lose 6R because you got in down here and you hadn't been trailing your stop. You could get stopped out at 12.50, and your protection on that is getting, oops, I keep going the wrong way, getting in and making 4R, you know. So let's try and do that. That's a good plan. Let's try and do that a lot more. Playing both sides when it should do what we think it should do, or when it does what we think it should do, or ready when it doesn't do what we think it should do. So anyway, I was hoping to make this a quick video, and then I always, you know, talk a little bit more about what I'm seeing. So hope this is helpful. Hope this is something you're learning from. You know, send me a like, send me an email, so I know who you are and that you're enjoying these, and appreciate the subscriptions. So yeah, hope you enjoyed this video, and we'll look forward to this week with plenty more. See what's going on Amazon. Thanks. This is Justin Amazon.